Welcome back to the channel, Trendsetters. It's your girl, Yashika Turner, your go-to real estate agent here in Hamilton, Ontario. Now, today we'll be diving into a very interesting topic, and it is how to get a mortgage so that you can be a homeowner here in Canada before the year ends, right? You have home ownership written down as one of your goals for 2024, and we want to make that possible. Now, before you start house hunting, house shopping, it is advisable for you to know where you stand when it comes on to your mortgage, getting a loan to buy your house. Now, let's even dive into the first thing, even what is a mortgage? Now, if you don't know already what is a mortgage is simply put, the loan from a bank or from a financial institution that helps you to purchase your property. But of course, it comes with conditions like interest rates and repayment schedule. In Canada, there are two types of mortgages. There is a fixed mortgage and there is variable mortgage, right? Now, the difference between the fixed mortgage rate and the variable interest rate is that with a fixed mortgage, your mortgage stays the same for a certain period of time. And with variable interest rate, then the rate changes. It fluctuates based on the market condition of what's going on in the financial world, right? So knowing these two options, which one is different, then you can make a decision on which one works best for you. Just to add, when you choose a fixed rate mortgage, you're having more stability. You know where you stand when it comes on to your mortgage payment each month or bi-weekly, whichever way you will be paying for your mortgage, right? So it stays fixed for a certain time period. Now the interest rate might be a little bit more higher, so that's why some persons might choose to go the variable rate route, because with the variable rate it is a little bit lower. You might be in good standing you might be in good standing when the interest rate is lower, right? But it can be unpredictable because when the interest rates go up, then your mortgage interest rate also goes up. So it's on the seesaw unpredictability. You are not sure what your mortgage payment will be in the next couple months, depending on what's going on in the world of finances, as I just said. So you will have to decide whether you want to risk it with a variable rate, or you just want to have your mind at ease when it comes on to a fixed rate, paying that same amount for the scheduled amount of time that you signed up for with your financial institution. Now that we have that out of the way, what is a mortgage and the different types of mortgage, how do you go about getting a mortgage? Now, there are different options of how you can get your mortgage. You can go straight ahead to meet with your financial advisor at your financial institution that you're with right now, whether that's your big bank or your credit union, right? Schedule an appointment and you go talk about getting your mortgage. Or you can be referred to a mortgage agent or a mortgage broker. Now, if you're in search of a mortgage agent, I myself, I'm a real estate agent. I have several different mortgage agents that I usually recommend, refer to my clients. My husband is a mortgage agent. We work hand in hand. He's a mortgage agent. I'm the realtor. So we work along with different clients. So the difference is, though, with when you go to your bank and when you go to your mortgage agent, you get what your bank has to offer you, right? They have, if that is the interest rate, if it's 5% right now, that's what you're getting from your bank. Whereas when you work with a mortgage broker or agent, they work on your behalf. So they're going to meet with you and we are going to discuss the documents that will be required when they're doing your financial assessment as your mortgage broker, whichever one, whether that's your bank or the mortgage broker, right? The required documents we will go over during this video. So stick around, don't skip through, because there are some important steps and the important documents that you need to have in hand in order to prepare to get your mortgage. So they will go over with you your finances, and based on their assessment, they will know the right product that will suit your financial need. So they work with different lenders, whether that's banks, whether they're private lenders, whether they're credit unions, different lenders. So then they can go to a type A lender to say, okay, your credit score is in excellent condition, you won't have a problem. So this is a type A, or a type B, or a type C. So there is a product out there that suits everybody, right? So don't look at what your interest rate is compared to your friend's interest rate, because their financial situation is different from yours. So that's how it is. Your mortgage broker or agent work as a wholesaler on your behalf, researching and finding you the ideal product that suits your specific needs. You're not just getting what this institution has. You're going to look around at all the different institutions and find the one that works better for you. Here are some of the documents that they will require from you to do their financial assessment, right? So they will need a job letter. So make sure that you have all these documents on hand, put away, filed away, so that when you meet with your mortgage agent, you have everything ready to go. Or if you are not there yet, get a pen and a paper so you can write down all these important information that I'm sharing with you. So you need to request a job letter, a verification of employment letter from your current employer. If you're self-employed, then just have the necessary documents to prove that you're self-employed. Number two, you will need your pay stubs, and recommended it is the last two pay stubs showing your address and the place of employment, right? So gather all that. If you're planning on meeting, write these down. Make sure you're writing them down, right? Then you'll need your notice of assessment. So here in Canada, we file our taxes. So that as the final assessment that you usually get in the mail, then you need a copy of that. Your mortgage agent will need a copy of that. If you're getting any child benefit or any other government benefit, then also have copies of that also. Then you will need your ID, of course. They'll need to verify it's you and with your address. So make sure you have all that ready. And then your credit score. Your credit score is very, very important. And your credit score, if you want to know more about what's a credit score, how to improve your credit score, if you're an immigrant, a newcomer to Canada, you're not familiar with that, I've done a previous video. I'll leave it right here of how you can improve your credit score, right? Get your credit in good standing. Your credit score is the number that shows how good or how bad you've been, how your credit has been, right? So the lower your credit score is, the lower your chances or the higher interest rate you will be paying compared to a higher credit score, which shows that you have a good credit history, you have a good financial history, you are good, you're not on the naughty list, you pay back. If you're using your credit card, you're not maxing out your credit card, you're paying off your credit card bills on time and all that stuff. So it is important to maintain good credit score so that you can benefit from lower interest. So next up, you want to make sure that you have some savings for your down payment, for your deposit, for your closing costs, and for any emergencies that pops up during this process, right? Here in Canada, the down payment is usually 5 to 20%, right? So if you're purchasing a house under 500,000, then the down payment will be 5%. Anywhere between 500,000 to below $1 million is 10%. Anything above $1 million is 20%. So you want to make sure that you have this money ready, because the bank is not going to lend you the full amount of the mortgage. They're going to give you a portion of the price that is listed for. So after you have met with your mortgage agent, they have assessed your finances, gone over your documents, now they can make a determination of how much you can afford and how much you can be pre-approved for. Now, I did a previous video on the steps that are involved in purchasing your first home in Canada. If you've not seen that video yet, go check it out right here after watching this video, of course. I did discuss some very important things around putting in an offer and while you're house hunting, to make sure that you don't go house poor, maximum out the amount that you have been pre-approved for. So it is important to know your finances, know your budget, and know where you want to stick within your budget so that you don't spend too much and find yourself in a financial strain where you don't have enough money if there's an emergency when you purchase a house, like the fridge breaking down, the washing machine breaking down, or you need some repair or some upgrade of the house. So your mortgage agent will get you pre-approved. Then you can have an idea of how much you are looking into when you're house shopping with your real estate agent. And if by chance you're in this market of looking to buy a house in Hamilton, Ontario, I'm your go-to realtor. So I will leave my email in the description so you can reach out to me, and I will love to be a part of that journey with. So now the next step is, after your pre-approval, you go out, you find a house, you put an offer in, then the next step will be to getting your mortgage secured. Now, again, you will be meeting with your mortgage agent or your financial institution to go over all the documents again, to make sure that everything is in order, to make sure that this house, they are in agreement, to make sure that this house is appropriate or suitable for them to lend you this money so that you can purchase this house, right? So you will get the agreement, the commitment letter, you will sign off, and then you will be approved, the final stage, before closing on the house. So this will be your green light to go and purchase. Before we wrap up, I want to leave you with some few bonus tips to make sure that your mortgage journey goes smoothly. Now, you have to avoid new debt. Once you're in the process of getting your mortgage pre-approved and you start this journey, this house hunting, house shopping journey, please avoid any new debt. Do not go out and purchase a new car. Do not go and make a big purchase with that credit card. Try to keep your purchases within your normal limit, like your regular grocery and bills. Wait, if you have to do any big purchase, wait until after your house is closed, after the mortgage deal is complete, because this will jeopardize your finances of how they have assessed it before, and then you'll end up in problems when it comes on to close. You want to be honest with your budget. Not because you're qualified for $800,000, you want to go ahead and spend all that on the house. Be mindful of your budget and how much you can afford. Now, that's it for now. If you enjoyed this video, let me know. Drop it in the comments. Any further questions that you might have, and go ahead and download the Hamilton City Guide if you're planning on purchasing your house in Hamilton. I'll leave it in the comments below. Thanks for watching and sticking around till the end. See you in my next video. Bye, friends.